Now, if you happen to be anything like me, you invest in covered call style ETFs because of the fact that you can earn a lot more income consistently a lot sooner than investing in traditional stocks and ETFs. And because of the option strategy that many covered call ETFs deploy correctly, that does happen to be the case, and you can get a lot higher yield out of them than, like I said, traditional investments. But the question a lot of investors have, especially newer investors, is where do you even start when it comes to covered call ETFs? There are so many of them. I'm showing you hundreds of them right now on the screen. And honestly, that's a really good question. If I was starting off investing today, not knowing what I know now after 8+ years of investing, I honestly wouldn't know where to start either. So in this video specifically, I'm going to share with you guys my 7 favorite covered call style ETFs across the market as of right now. These ETFs not only all pay a massive amount of income consistently on a monthly basis, but also they all offer a positive total return, and this is since inception. So if you're interested in covered call style ETFs and you want to see my 7 favorite as of right now, well then make sure to stick around, drop a like down below, and let's go right into the first one. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, of course, because there are so many covered call style ETFs across the market, make sure to take some time, do your own research, and try to figure out which covered call ETF matches your strategy, your objectives, etc. But the first covered call style ETF that's one of my favorites and one that I'm going to be buying all of this year is the Goldman Sachs Nasdaq 100 Core Premium Income ETF, or ticker symbol GPIQ. Now, this ETF has a very simple objective. It says seeks current income while maintaining prospects for capital appreciation. Now, reasons to consider investing into this one: it seeks consistent monthly distributions, it pays out consistent distributions monthly, and this is from things like option premiums and equity dividends. But along with that, this ETF is going to offer core equity exposure with lower volatility, provides core equity exposure to the Nasdaq 100 index, and dynamically sells call options, allowing for participation with the rising markets and potential outperformance in negative to flat markets. Now, this probably is a good time to bring up the point that every single one of the covered call ETFs out there might have some things in common, but they all in their own ways are a little bit different. And I get the question quite often, why in the world do I invest in so many different Nasdaq 100 or S&P 500 covered call ETFs? And my answer is exactly that: because I want exposure into every single one of the unique strategies which I choose to invest into. Now, I promised you that all these covered call ETFs are going to offer a ton of income from day one, but also have all offered nice performance historically. Now, for example, with GPIQ, a $10,000 investment during inception would have already been $13,500. And keep in mind, this ETF has not been trading that long whatsoever. But to look at the actual income with this ETF, you're talking 41 cents, 40 cents, pretty consistently every single month since inception. All this to say that if you're interested in Nasdaq 100 exposure, but you want it in the form of a covered call ETF, this is one of my favorites, if not my current favorite, across the entire market as it sits. Another one of my favorite covered call ETFs, and this is actually a rather large position in my personal portfolio, I own over 850 shares, is SPYI, or the NEOS S&P 500 High Income ETF. We've talked about this ETF quite a bit on the channel. This ETF also pays monthly. It offers around a 12% yield, which is a little bit higher than the last one, and offers exposure to the constituents of the S&P 500, but then you guessed it, with a covered call strategy. This ETF also is very tax efficient because of the strategy, utilizing tax loss harvesting opportunities, as well as 1256 contracts. Also special to SPYI, this ETF at times might actually buy and sell SPX index options, which means that even though you're getting around 11 or 12% as far as yield goes, this ETF also does have the potential to grow, which it has done at least slightly historically. Now, as far as distributions for SPYI, we're talking a very consistent, somewhere around 50 to 51 cents if you were to average out the last 12 or so months. Now, that's a massive amount of income considering this ETF costs around $52 per share and can definitely skyrocket your passive income with a relatively small amount of money invested. Now, for me personally, I love having S&P 500 exposure, and I think SPYI might have the best strategy overall across all covered call style ETFs, at least from what I've seen in the market as of today. So if you want S&P 500 exposure, but with that high income exposure, definitely check out SPYI if you haven't already. Another one of my favorite covered call ETFs is exactly the same thing as SPYI, only this time instead of the S&P 500, we're talking the Nasdaq 100. We're talking about QQQI, or the NEOS Nasdaq 100 High Income ETF, which has a little bit higher of a distribution rate compared to SPYI, but also might offer a bit more beta. Now, we don't have to go through QQQI because it's the exact same thing. Like I said, the only difference is they invest in the constituents of the NASDAQ instead of the S&P. As far as distributions go with this one, we're talking anywhere from 60 cents more or less on average per share per month, which once again is a boatload of income considering how cheap the ETF is. This is another one that I've been stacking over the last year or so, and I'm definitely going to build out a larger position in throughout this next year just because I do believe in the NASDAQ 100, but I personally would rather have more exposure to it in a high income format like QQQI can offer. Another one of my favorite covered call style ETFs is a rather newer one in my portfolio, BALI, or the iShares Advantage Large Cap Income ETF. This is an ETF that I don't really see that many dividend investors talk about. Now it says right here the investment objective, the iShares Advantage Large Cap Income ETF seeks consistent income with lower volatility than the broader US equity market. It then says why BALI, number one, active US large cap exposure, systematic stock selection process seeks to benefit from data to uncover insights faster at greater scale with more precision. Number two, seek to enhance monthly income, seeks to enhance dividend yield by selling call options. And number three, target potential growth, active large cap core exposure that seeks to provide upside while managing volatility. Now this ETF, also rather new, has already offered massive performance to investors, turning around $10,000 into $14,000 just over the past several months. Now, as far as distributions go for this one, we're talking anywhere from 20 cents, 23 cents, 12 cents, 20 cents. The distribution payouts are sort of all over the place, but still a consistent, decent yield, especially because this one offers a little bit more upside in my opinion. I may have made a video about BALI in the past, but if you haven't seen it already, definitely do a little bit more digging into this one. Another one of my favorite covered call style ETFs is the Goldman Sachs S&P 500 Core Premium Income ETF, or ticker symbol GPIX. Now this ETF is very similar to that of GPIQ, but you guessed it, instead of the NASDAQ, this one uses the S&P. But along with it, the reasons to consider investing are exactly the same, the strategy is the same, and I personally am betting on the fact that these two Goldman Sachs Premium Income ETFs, I'm talking GPIX and GPIQ, I'm betting on the fact that these ETFs are going to outperform a lot of the other covered call ETFs across the entire market over the next year plus. And this is simply because what I've said already before, they dynamically sell call options, which means there could be more upside compared to other things like jepi and jepq. Which, speaking of jepi and jepq, these are the two last covered call style ETFs that I have to include in this video. These two are also some of my favorites and two ETFs that I've owned in my portfolio for several years now. Now, JEPQ is the JP Morgan NASDAQ Equity Premium Income ETF, and I'm sure you guys are already well versed on this one. JEPQ offers anywhere from 9% to 12% yield, depending on whatever time frame you're looking at, but also JEPQ has grown a lot faster than a lot of other covered call ETFs across the market as far as price return. Now, as far as if I were to have to bet on one single covered call ETF and only buy one of them, a lot of times I say it would probably be JEPQ. And this is simply because of the strategy and the performance that we've seen so far. But I also don't want to discount the fact that JEPI, or the JP Morgan Equity Premium Income ETF, has also done very well historically, offers a little bit smaller of a yield, anywhere from around 7 or 9%, but also buys into a high quality basket of holdings, sells calls, and has done really good historically. So there we have it, guys. Those are 7 of my current favorite covered call ETFs across the entire market. And this is in a current era where there's so many covered call ETFs to look through. Now, just because I like certain covered call ETFs don't necessarily mean that they're perfect for your portfolio, because again, you can pretty much find something out there that matches every single investor's needs. But lastly, before I go, I want to ask you guys down below in the comments, if I were to ask you what's your #1 favorite covered call ETF as of right now, drop the ticker symbol in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.